Are you interested in investing in industrial commercial real estate? Watch this video as I walk through 3 simple questions you can ask yourself as a real estate investor to find out if industrial real estate is right for you. Ron from Ronald Law, and if you subscribe to this channel, you know I love industrial real estate. Now, this video is really going to be targeted at that new investor or somebody who is considering doubling down or making a big shift in 2023. And I'm just going to outline a little bit of the macroeconomic factors in favor of industrial, some of the drawbacks, and then ultimately, what are the 3 questions you should ask yourself, and how you answer those questions really should decide whether industrial real estate is right for you. All right, let's get started. Industrial real estate provides some of the best returns out there in commercial real estate. Everyone in the media has been talking about this industrial boom. Okay, we've had a near zero vacancy rate for a very long time, which has contributed to sky-high rent increases. While that's all been well and good, in the last year, we have finally seen some of that tenant demand start to decline. So vacancy rates are rising a little bit for triple net properties, and there's generally a sense that vacancy rates are going to return to a healthy level. This is a historic reversion to the mean for industrial. However, there are still incredible opportunities in industrial. It's not all doom and gloom. If you believe in the future of e-commerce, automation, artificial intelligence, and just general population growth, then industrial real estate is the right asset class for you. First question, are you liquid? Okay, I get this question a lot, and I understand there may be ways to get in with 100% seller financing. You may have a borrowed down payment, but at the end of the day, you need to ask yourself, are you liquid? Do you have a considerable amount of equity that you can invest? Okay, this isn't residential. This isn't a small multi that you're going to be able to loop in with $20,000 and a packet of gum and shoestring. You need, I would say, a minimum is 50K, 150K, or 200. Whether you invest the full 200 or not, you need to have some sufficient liquid reserves to come up with various costs. So that's the first threshold. Are you liquid, and do you have a consistent cash flow source that can cover your other expenses while this investment gets up to speed and before it starts throwing off cash? So that's the first question. Are you liquid? Number 2, do you want to scale? So I see this a lot because the alternative to this is buying a single asset and then just setting it and forgetting it. So it's almost just this completely hands-off, non-checkup. You have a very long time horizon, but industrial is really well suited to the investor that wants to scale his wealth. You can stack properties, you can do a portfolio roll-up. There are all sorts of different niches within industrial that I think it really makes it optimal if you do want to scale, if you really want to grow beyond just 1 or 2 properties. Now, there's nothing wrong with that, and for those types of investors, I may recommend even a single tenant absolute net lease industrial property. That's totally fine. But you may be looking at more financial product options. This is one of my most famous quotes. I'm active on Reddit, and Graham Stephan, if you guys know who he is, we were commenting, we were talking on a thread about single tenant absolute net retail properties, which is really a very low cap rate. They're going to barely be above the 10-year T-bill to try to reflect the amount of risk, maybe compared to the tax benefits, maybe compared to the rental increases over time, as well as the very low risk that the tenant defaults, right? These are your Starbucks, these are your Dunkin' Donuts, really high quality assets on absolute triple net leases. And the key to that is if you are looking for just 1 or 2 properties to park a few $1,000,000, you're going to be competing against fixed income products, right? These are going to be bonds. These are going to be 10-year T-bills. They could be junk bonds, corporate bonds, whatever, muni bonds. That is who a single tenant net lease is. If you're buying that, you're competing against a fixed income product, a financial product, not competing against other real estate. So to recap that whole thing, if you're looking to scale, look at a broader range of industrial properties. If you're looking to hedge or preserve your wealth, you may still look at single tenant properties, but that's going to be very different than what this video is. Finally, do you have the patience to get rich slowly? I think this is one of the most important questions that you have to ask yourself. What are your goals as an investor? How much money do you want to make? How much equity do you want to have? How much cash flow do you want to have? If you're looking to do things quickly, industrial is not right for you. If you are willing to be patient and willing to take the time to invest in systems, invest in procedures, and build long-term relationships with your service providers, with the tenants, with the brokers, everybody in the stakeholder community, industrial is a great place to do that. And I say that because the quality of your income is much, much stronger than anything out there. I'll say that even a multifamily, tons of competition. Your leases and your income are only as good as the next turnover and the next new development coming up next door. But your income is only good for a year at a time. If you have a residential portfolio, there's a lot of risks of eviction moratoriums. You have tenant rights groups. You have free lawyers for eviction defense. That doesn't happen on the industrial side. So I think it's a perfect storm of, if you have a plan to build wealth in the next 3, 5, 7 years, industrial is that asset class to build it. Now, I'm going to go into a little bit of a preview. How do you invest in industrial? Identify a sub-market within a metropolitan area and really become an expert. And I say that because a lot of people are too wide. They're an inch deep and a mile wide. That's not going to get you to move the ball on your first deal or to be able to buy in this uncertain environment. In 2023, we've got interest rates going up. We've got the economy going wonkers. Who knows what's going to happen? However, if you develop your expertise in a very narrow niche, that's going to do a lot of things for you. You are going to be able to build credibility with investors, with lenders, and with the sellers. And secondly, it's going to improve your confidence to be able to pull the trigger on a deal, on a price per foot basis, on a cap rate basis, on a tenant basis, on a demand for vacancy, all of these things. If you are very, very laser focused, I didn't know laser was an acronym. Check out Chad Griffith's channel for what laser stands for. Laser focused on a single niche. It will build your confidence to risk your money in an uncertain environment. And that is how you hit home runs, is developing your niche, having confidence, and convincing others of the certainty of how right you are. A couple more reasons why industrial is very popular is that it's limited supply. With all developers pausing new construction builds right now, there is not going to be a ton of new inventory coming online in the next 12 to 24 months that is going to compete with your product to push your rents down. So a lack of new inventory spells increased demand for existing. That's going to be in your favor. In addition, if you're buying in infill locations, cities aren't keen on improving more industrial development. They are not approving additional zoning changes. And so if you're infill, you're protected. If you have that existing product that has a right, you are going to be protected against increased competition in the future. I talked about it a little bit earlier, but there's a lower eviction risk. If there's ever a COVID or type of tenants' rights again, as a commercial property owner, you are always going to be able to evict, and choose your markets carefully, but you will always be able to evict commercial tenants for non-payment of rent. And the demand is a lot higher. So strong eviction protections compared to multifamily. You have stronger demand compared to a product like office. All of this creates a perfect storm for industrial to come out the clear winner. However, you still have to buy right. When deciding whether commercial real estate is right for you, there is no wrong answer. You must be able to evaluate your own situation, your own goals, and what method you choose to ultimately reach those goals is up to you. Industrial appeals to a broad range of investors, but it's not for everyone. If you are interested in learning more about industrial real estate, subscribe to this channel, smash that like button, and we'll see you next time.